please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, Castrol posted a strong set of numbers. Rashmi Joshi, the CFO of the company, is with us. She's also the whole-time director. Rashmi, hi, good morning. Very good numbers from the company. And you recently took a price hike of almost about 3.7% to pass on the oil cost. Tell me, are any more price hikes on the anvil? And is this margin of 31% something that you could maintain?
So, first of all, thank you for having me on the show, and I would like to say that Castrol has delivered remarkably well, despite a tough operating environment during 2017, and our growth strategy is on track. And we've grown, especially on the fourth quarter. I would say that we've really gained momentum, and we've seen volume growth across categories. So our volumes grew 16% year on year, and we also grew volumes 11% quarter on quarter. It's a second consecutive year of volume growth, which we haven't seen in Castrol for a long time. So I'm sure we are, we are seeing a very good momentum. Everything seems to be working well. We've done the right things, through customer acquisitions, investments in brands, technology, introduction of new products, and working on customer centricity. So these are some of the things which have helped us gain this momentum. Coming back to your question on putting in a price increase, Castrol has always been leading in terms of price increases, and we did the same this time too. So whether there will be another price increase during the year depends on how the cost of goods environment comes through during the year. As of now, we see crude a bit range bound. The long-term outlook, as we have from our group, is about $55 to $60 for the year. So we will see how things evolve, how the rupee exchange rate also works, because those are the two big components in our cost of goods. So depending on the cost of goods movement, we will take pricing actions in the market.
Okay. Morning, Rashmi. What's the trend you are smelling in terms of raw material costs?
So as I just now said, currently the crude is around 60, but we see it settling at between 55 to 60, considering various factors.
And also base oil prices.
That's our estimate for the year. So, sorry?
Base oil prices, do you think that will remain steady? What's the anticipation?
Okay. Yeah, so the base oil prices will remain range bound if the crude remains range bound, because they more or less follow the crude after a certain lag. As of now, we do not see any reason for volatility in base oil prices, except for crude changes. Of course, there could be various factors relating to refining margins or shutdowns of refineries, which we haven't heard of as of now. So it looks like we are going to have slightly rising but a stable cost of goods environment.
Okay, I wanted to also discuss with you the huge recovery we are seeing in the commercial vehicle lubricant market. What kind of growth do you envisage there, and how much do you get from that pocket?
So almost 50% of our volumes, or almost 50% of lubricants volumes, come from commercial vehicles in India, and that's true for Castrol as well. In terms of longer-term commercial vehicles volume, oil volumes growth, we believe it's going to be flattish, but in next 2 to 3 years, because Indian infrastructure is being built and a lot of freight movement is expected, we do expect healthy growth in commercial vehicle oils also, and I guess between 3 to 5%.
Okay. Any word you can tell us about demand? From the look of the personal vehicle numbers, be it two-wheelers or four-wheelers, it does look like demand is reasonable, but you have your finger on the pulse. You think that you will be able to pass on price increases? You expect volumes to grow?
So price increases is a function of pricing premiums that we hold as well as cost of goods in the market. And we keep looking at both from time to time, and no one strategy works for all brands together. So we focus on various spaces and brands, and depending on which segment of the market we are playing in, and price increases will be placed based on that. So we do look at healthy growth pattern in personal mobility as well as commercial vehicles for this year and maybe another 2 years. Considering that if there is a cost of goods increase, we will be able to pass on the price increases is what we believe. But again, we'll have to see the competitive intensity and take actions from time to time.
Just two numbers that I was looking at. On the sales volumes front, this time was very good. You did about 55 million litres. If you can tell us what the expectation is for the next fiscal, what the growth could be, and on average realizations from 180 rupees per litre, how much do you think you can go to?
Okay, so we grew volume 16% during the last quarter, and it was 54 million litres. Going forward, we expect a good momentum in volume growth. In the longer term, we expect the volume growth to be around 5 to 6%. Okay, and that will be slightly above the market growth. We've done well on the market share. We continue to hold our around 20% market share, and we've grown our market share in personal mobility as well as in some segments in CV as well. So we've been doing well there as well.
All right. Thank you very much, Rashmi Joshi, for joining us with all the fine print on Castrol. Rashmi spoke about crude possibly being in that $55 to $60 range. But the person who can best tell us that is Manisha. And she's joining us with the early trends in the commodity markets. Morning, Manisha.
Morning, Latan. Thank you for that. Well, the global equity markets holding, and we are looking at commodities as well, snapping the kind of losses that we did. And there is some ground being regained in this sector as well. So the crude oil prices are back around $66 per barrel for the Brent prices. We are trading with nearly 0.5% of gains onto that one. It is the rupee appreciation which hasn't led to more gains coming in for the Indian commodity markets. But we are back above 4,100 for this one as well. For crude, essentially, you would also want to wait for the US data. The Department of Energy is coming out with the weekly numbers and the monthly demand supply numbers for energy as well, and the further directions would come in from that. The gold and silver prices are trading positive as well as the US dollar holds the kind of rally that it saw in last couple of days. So we are off the 3-week lows that the gold prices were trading at. So back above 30,000 rupees onto that one, and silver clearly has been the major gainer. We saw a percentage point of gains yesterday. 0.5% up is how it's open for trade today as well. The base metal space has had it good as well. The New York session yesterday saw some gains. So the overnight markets actually closed in positive, and Shanghai started on a good note as well. So we are trading 1 to 3% on the higher side for many of these metals right now. Remember, we've been telling you on how the long-term fundamentals are strong. It was about the sell-off in equities and other asset classes that pulled these prices down as well. Markets are anticipating that you will see even more gains coming in as China restocks ahead of Lunar New Year holidays and after that a 1-week holiday as well. So that is something that the investors are watching out for in sense of numbers.
Okay.
Trading strategies?
Yeah, sure, go ahead.
And we have them from Grow Value today. They have buy calls across board onto this one. For crude oil prices, they're looking at levels of 4,220 on the higher side. They also have a buy call for copper, looking at targets of 465 on the upside.
Okay, Manisha, thanks for that. Sorry for that interruption, but I got excited with the Jaguar Land Rover numbers that just came on the exchanges. Not looking good at all. It's still a low single-digit growth that JLR is seeing in the month of January. Only 3% growth for JLR's numbers overall. 1% growth in Jaguar and 4% growth in Land Rover. And UK and Europe have fallen. So UK is down by 4%, Europe is down by 9%, and it's only the Chinese market which is the saving grace. But the management says that key UK and European markets continue to be under pressure.
You know, Sonia, you're a gentle, sweet person, but when you see bad auto numbers, you become as fierce as any analyst. Well, that's the word from the expert on autos. We have to take a break. We are back with another, well, the morning dip, if it was bought, the first hour dip, that person is in the money. So we want to know whether this could continue, whether that was a good strategy, and whether the market now trends higher. So market's also very interesting at this point in time. But we will come back with our technical experts in a bit. For the moment, it's a management that's joined us. Cochin Shipyard, they posted a strong set of consolidated earnings in the third quarter. The shipbuilding EBIT spiked to 1.6 times, while margins also improved as subcontracting expenses fell 27%. Madhu Nair, Chairman Managing Director, joins us on the phone line. Mr. Nair, good morning. A strong set of numbers is what you've reported. What is the reason for this jump in the EBITDA of the consolidated business?
See, there are 2 points here. One is this particular quarter, we have had a fair bit of strong figures coming in from the aircraft carrier fixed part of the contract. Also, the ship repair has done very well. Ship repair, actually, if you are seeing, like we have in the 9 months, we have reached 526 crores. So we are almost close to the full year figures of last year.
Okay, the shipbuilding margins have come in much higher this quarter. Can you tell us why?
See, the shipbuilding, what we are doing is, like, you know, we are doing the aircraft carrier and the non-defense projects. Again, on the aircraft carrier, the revenues are coming from 2 parts. One is coming from a what we call the cost plus basis, which is a material part of it, and the other one is from the fixed part of it. Fixed part is where we actually do the work, and that is where the profitability is coming from, because cost plus basis, it is just a markup which we get. So this quarter we have been able to do substantial work on the fixed price part of it.
Okay. Mr. Nair, in terms of ship repair for this quarter, why did the margins come in lower?
Quarter to quarter on the ship repair, maybe a little bit of a misnomer, because in our accounting, how we handle this is, if a ship does not cross 75% work completion, you're not accounting that. So the work would have happened, but then the revenues wouldn't have been accounted. That is the accounting policy which we are taking. So cutting it at a quarter, we have a difficulty. So probably my request is you should not look at ship repair on a quarter to quarter, but more on a more longish basis. So on a 9-monthly basis, the EBIT margin is around 23%.
Reports peg that, you know, INS Vikrant will be handed to the Navy by December 2018. Can you give us any update on it at all?
See, the vessel's delivery to the Navy is not 18, it is 2020 October. The handing over, what has been conveyed in the press recently, is basically like the vessel starts getting into various tests and trials where the Navy is also on board, you know, so that is what was conveyed. But the delivery per se is October 2020. And to give you an indication on the order book, see, when we are talking about the Vikrant order book, the phase 3 contract is yet to be concluded. We are in the negotiation process right now. The drafts have been exchanged. So we are only expecting to conclude the phase 3 contract by end of 2018, early part of 2019, more likely end of 2018. But if you factor in about 3,000 crores for that phase 3 part, then the overall order book as on hand is around 12,600 crore rupees. Okay.
Well, Mr. Nair, if you can tell us something about your current order book and in terms of top line, what's the target for the next year for FY19?
See, the order book right now, as I said, 12,600 on the shipbuilding side. Ship repair inclusive, we are close to 12,950 crore is order book right now. And this does not include about 5,800 crores of projects on which we have been declared L1. So that will get converted into a contract shortly. So this is the order book position, which is fairly strong. Now, going forward, see, this year we have another one more quarter to go, and I can convey that this quarter will also be fairly strong, and we expect to, especially ship repairs, will cross around 600 crores this year, and on the overall part also we'll see at least around 15% year on year we'll see an increase.
Okay. Thank you very much, Mr. Nair, for joining us with all those details and your outlook. Well, we have to wind down on Bazaar as well. We'll have to say that the market could not hold on to the early highs, and therefore round one did not go to the bulls. But the bottom also has seen a bit of buying, and the market looks painfully trying to trudge its way towards 10,600. It's still exactly at the 50-day moving average. It's just crossed it. It's come above it. So maybe that's another point in favor of the bulls. But it does look like this match can go anywhere because it's 8-9 stocks in the green for one in the red.
Oh yes, a long day lined up ahead. So with that, it's curtains down on Bazaar. Chart Busters comes up next.